We just laid out some of the geopolitical tensions going on. I know you're also looking at a few other ones, including Venezuela, Guyana, and also what's going on in the Democratic Republic of Congo, in addition to just the tensions in China. So clearly there's a lot for us to talk about. I want to start with the broad picture. When you're talking to your clients who are often investors, how should they view the risk out there globally, and how should it guide some of their investment decisions?
Well, Frank, something that's changed in the last 4 or 5 years that we've noticed from our clients at Control Risks is them asking us to talk more about these low likelihood but very high impact events. And that's been driven by two key experiences. Number one, the COVID-19 pandemic, which forced most multinational companies to realize that they live in a world full of countries that can have different laws and jurisdictions. And the Russian invasion of Ukraine 2 years ago to the day also brought home that point that these high impact events can happen no matter how likelihood you might think they are. And there's more of them out there in the world. And unfortunately, we're seeing a world in which these low likelihood, high impact events are just happening more and more.
Right. That's an interesting thesis, Cormac. So give us a sense. The Israel-Hamas war, is that a low likelihood situation? It's clearly been high impact. We've seen the impact on the Red Sea and other things. And then also we see a lot of global brands highlighting the impact. Many of them seem to be in the consumer discretionary and consumer staples space. Do you expect that sector to be disproportionately impacted by what we're seeing in the Middle East specifically?
So this is an example of a conflict that one could have predicted. Israel, Hamas going to war with each other, not necessarily unpredictable, but the nature in which it is affecting the region, that is something that we at Control Risks, we advise our clients to scenario plan for these events. So not just stating that an Israel-Hamas war may occur, but what are the scenarios that might play out that affect the broader Middle East region? And one of those scenarios, for example, is regional escalation, something that we're not quite at yet in terms of regional conflict or war, but there are trigger points for that scenario. And one of them is indeed what we're seeing in the Red Sea with Houthi attacks on shipping. And in that specific trigger point, you are looking at an immediate impact on one specific sector, that is shipping and the maritime industry generally. And then there's, let's say, the ripple effects from that. It's the cargoes that those ships are carrying and the supply chains that will be affected as those ships stop. And of course, that's affecting no one more than the countries right there in the Middle East.
Yeah, we're showing the audience right now some of the attacks on international shipping in the Red Sea. On the other side of the coin, I was actually surprised that you said you're also talking to your clients about the opportunities that are coming from some of these events. And you're actually looking at the Russia-Ukraine war as potentially long-term as a possible investor opportunity.
Well, our job at Control Risks is not to scare our clients away from doing business. It's quite the opposite. It's to help them understand the real risks that they may be venturing into and to embrace opportunity where they can. So that's just a good example. Of course, Ukraine is a war zone. It's not a place you can just easily enter and do business very, very, very securely. But you can. Control Risks have been into Ukraine ourselves. And while the war is ongoing, there's also billions of euros and US dollars being prepared for reconstruction efforts. And those dollars and euros are coming from the European Union, the United Kingdom, and the United States. And it's going to be companies from those areas that are going to be able to take advantage of those opportunities to invest. And that's just one example in Ukraine.
So can I ask you, would you invest in an index tied to the country or tied to the region, or specific stocks that you think would benefit?
I think specific stocks are worth looking at, because if you look at the construction companies, for example, and everything in the supply chains around them, that will be gearing up to go into major building and reconstruction efforts into Ukraine, and that would entail specific stocks.